This tool is amazing. The VWAP is one of the best tools for trend confirmation in trading. Combine it with support and resistance levels, and you'll have a complete high probability trading strategy. And in this video, I'm going to teach you everything you need to learn about the VWAP indicator. VWAP stands for Volume Weighted Average Price. On the chart, the VWAP and a moving average may appear similar, but they're actually calculated very differently. A simple moving average considers only price and disregards volume. However, the VWAP fixes that and is calculated by multiplying the typical price by volume and then dividing it by the total volume. Trades with big size can be difficult to fill, especially in low volume markets. Therefore, big traders prefer to trade them into a level with a lot of converging volume, like the VWAP. They do this because they're more likely to have their large orders filled. This is why the VWAP can act as a strong level on any chart. Most analysts consider the VWAP to be more representative of a true average price for a stock or asset. Typically, this is used on intraday charts, as it resets itself with every new trading session. If you want to win more trades, you're going to have to learn when and how to use it. So by default, the VWAP indicator on TradingView will display 3 levels. The middle line is actually the VWAP line, and the other 2 are upper and lower bands. I recommend to disable the upper and lower bands because they really just add noise. All we're looking for is the VWAP here. So what does the VWAP tell us, and how do we use it? When price is above the VWAP line, the market is considered bullish. And if it's trading below the VWAP, the market is considered bearish. In addition to that, it's also a very consistent level of support or resistance depending on what direction price is trending. Let's put this to practice. Over here, this market was in a downtrend, as it was trading below the VWAP. We can also see that it's respected the VWAP level, but then traded down lower. Here you'll notice that the market didn't actually tap that exact level. This is totally fine, because remember, you should treat this level as an area, not a literal number. More often than not, price goes through the VWAP line, faking you out or making you think that it won't hold. But time and time again, it actually ends up respecting it as price begins to reverse. So here, the market has created a higher high, signaling a bullish reversal. Something to keep in mind is that we're only using the VWAP as an additional tool for confluence. It should not be used just by itself. So identify a level of support. This old level of resistance has been broken, and when price returns to it, we can expect it to act as support. In this example, the VWAP also lines up with our key level, adding confluence to a trade taken here. So we may look to set a buy order with our stop set below the VWAP and just target resistance levels above. Now, to use the VWAP in order to create a short trade, you're going to follow really similar steps. Here, the market was in a local range. At one point, it broke down lower, creating a new lower low and suggesting a downtrend. Price is also trading below the VWAP, an additional indication that this market is bearish. With this in mind, it is likely to go down lower after a retracement. So as always, identify our levels of resistance. Then look for more confluence, like a fib level. Here we have 3 levels of confluence at our resistance level: the 0.5 fib, the VWAP, and our horizontal. You could look to immediately get in by setting a sell order at this area, or you could wait for a candlestick pattern to form for additional confluence. As price is retracing, we see it react multiple times, creating a series of equal highs. Then finally, the market swept through these highs with a long wick. Here we can enter at the candle close, setting our stops just above and targeting our support levels lower. While you might think you've already mastered the VWAP concept, there's actually another really important element that you should be aware of. This is the anchor period. You'll find this in the settings for VWAP. Just open up the VWAP by double-clicking on the line. Here at the top, there's an option called Anchor Period. By changing it from Session, which is the default option, we can experiment with different time frames like the weekly or the monthly. I highly suggest everyone gives this a go for themselves. As always, higher time frame levels are more significant, and the same thing applies to our VWAP. If you're feeling savvy, you can combine multiple levels of VWAP by adding in another one in the Indicators tab and changing to different anchor periods. Make sure to also change the size or color to be able to tell which one is which. So let's test that out. Here we are using the session VWAP along with the monthly VWAP. What you'll notice is that the market was in a downtrending direction. Once it reached the monthly VWAP, it started to change course and moved higher. Now we have a series of higher highs and higher lows. This market is likely bullish. Identify your point of interest, like here with these series of swing lows, which was our support. Combine it with the Fibonacci, and we can see that it lines up. The session VWAP is also nearby, so now we have found our point of interest. After the market has tapped this level, wait for a candlestick pattern to develop. Here it begins painting a bullish hammer. You can look to enter here, or after the next bullish candle close. By setting your stop just below, you can target your resistance levels above for a favorable risk to reward. But let's look at it a different way. Here you can see that the market is trending down, and it's making lower lows with lower highs. Notice how it's tested the monthly VWAP as support multiple times, each time weakening it until eventually breaking through. By identifying this early, we can be more confident that the VWAP is actually being respected. So when price comes back, we can be confident that it's going to hold as resistance. We also have these series of equal lows as an additional level of resistance. Here price moves up and tests that level, but notice how it did with these large candles. The momentum is currently bullish, so you want to wait for it to change course first, instead of immediately entering at the retest. As price is consolidating, we finally have a proper lower low being created. This is our signal that bearish momentum is back, so you can look to enter now at the retest of the swing low and fair value gap. You can set your stop above the high and target again your levels lower. I have just one more example for you so you can really digest this information and put it to practice in your trading. In this example, the market was previously bullish, but at one point it started to reverse to the downside, making lower highs and lower lows. You can notice how it previously has reacted from the VWAP as support. So now it is likely to respect it as resistance. This area of swing lows is also a good level for resistance. Enter a sell position once it breaks the most recent swing low. Set your stops just above these highs and target downward. Overall, the VWAP indicator is highly effective for defining support and resistance levels. It's a powerful tool for confluence. If you've learned something from this video and know a trader that might benefit, share this playlist with them. In the comments below, let us know how you feel about this concept and what concepts you'd like to see covered in the future. And come check out the rest of our free educational content on this channel.